You go check if it tell you say I did live. Huh? Zoom. Can you guys hear me? Check if you can hear me. Check if you guys can hear me. All right, so just a minute. Let me share the screen to every platform. So we'll begin. All right, so I believe everyone can see my screen and everyone can hear me clearly. If you can hear me clearly and you can see my screen clearly, just drop it in the chat box. So I know you guys can see my screen, you guys can hear me. All right, someone say can't hear you. Just try again and see if it's gonna connect. All right, everyone saying clearly. All right, now, like I said, today's live, I'm gonna show you how I'm gonna trade this very week, right? And also how you should trade this very week. Right? Now, I'm not gonna waste time. Since everyone can see my screen, let me begin. Now, generally in trading, right? In trading, we are here to make money. Right? Me personally, I'm not here to impress you, right? With what I can do. I'm here to make money. Right? Now, in this very live, I'm gonna give you step by step on how you should trade every single time. You're gonna apply it this very week. Right? You do what I say this very week. and then you go over, keep repeating it. See for yourself how it's gonna be this very week, right? Then you keep repeating it and see if you won't become profitable, right? Now, the first step everyone is gonna do in trading is to fund an account. You fund a trading account. Maybe you save up money from your monthly salary, and also maybe those who do side hustles, right? You save up some money and you fund a live account, right? You want to take trade, or you have a prop firm you would like to be trading, or you got a prop firm and that's a prop firm you want to be trading, right? Now you want to go over and make money on that prop firm, or go over and make money on that live account. Now, how are you gonna do it to actually make money from this very account? Now, the first step in going about it is always gonna be how much are you willing to risk, which is your risk per trade. Now, in trading, to actually start making good profit, consistent profit, and not depositing over and over again, is when you learn to maintain your capital, right? When you learn to sustain your capital, be conservative with your capital. Now, generally, what trading is this, right? You put in money, right? Then you risk to make more money. That money you are putting into trading is not guaranteed. There's no guarantee that you're gonna make money or you're gonna lose it, right? But you are trying to be smart and make money from that deposit you made. Now, once you fund this account, you want to pick how much you will be risking on a single trade. If you're gonna take this very trade today, you make money definitely. If it goes well, you fund $1,000. It goes well, you make money. You make $2,000, $3,000, $5,000. But what if that trade goes wrong? Right, that's one thing. What if that trade goes against you? Did not go as you were expecting? How much are you gonna lose? Will you lose the whole account and then deposit again the next day, or deposit again the next month, then trade again, lose the whole account just on one single trade? That's what your risk is gonna be. You want to pick from this very account, from this very deposit, how much am I willing to risk? Now, we traders, you're gonna see some traders, they're gonna start flipping accounts. They're gonna start taking crazy risks. They'll start taking $1,000 to $10,000 to $20,000, just flipping their account. Right? On a normal scenario, that's not how you trade. Right? In a case where you want to flip, you don't flip the whole deposit you just made. You're able to save up, you fund $100, $1,000, $10,000, you don't flip the whole account. Traders who flip account, you hardly see me flipping account. If I'm gonna do it, I can do it risking $1,000 on a single trade. Right? Now, but traders who do it, this is how they do it. Once they go over, they put that $1,000. That $1,000 now is just like maybe 5%, 1%, 10% of their main trading capital. Right? No trader is gonna have a net worth of $1,000 and they put the whole $1,000 and start flipping it. What they're gonna do, they're gonna have a certain risk. They're gonna create a plan for that very account, of which that's what I'm gonna give you in today's live. Now, once you fund, no trader, if you notice, no trader is gonna start flipping $100,000 or flipping $1,000,000. Why? Because they only flip that certain amount they are willing to lose. They're only flipping 10%, 1%, 5% of their main trading capital. Because they know if they flip that $1,000,000 and it goes against them, they're gonna lose more than what they plan on losing, or they're gonna lose more than what they plan on risking. So what you want to do once you fund that amount, you want to create a plan for the account. And the plan is gonna be the first thing I'm gonna show you now. The first thing is gonna be your risk per trade. If you fund this account, how much are you going to lose if any trade goes against you? Right? Some traders are gonna say, I'm ready to lose 10% of this account, which is about $100. If that $100 is suitable for you, if it's okay with you, then you go for the 10%. In this case, now you are splitting this account into 10 trades. If you're risking 10% of this account, it means you are splitting this account now into 10 different trials. You have 10 times to try. If you try the first time, hit stop loss, try the second time, hit stop loss, you still have about 8 more chances to try. Once you have tried 10 times, that's when you definitely know I've blown this account. After hitting 10 stop loss in a row. Now I want you to check yourself. Is there a chance of me hitting that 10 stop loss in a row? Consistently, I'll hit 10 stop loss. Is that going to be possible? If that is possible, you've done it, you've hit 10 stop loss in a row, then you can go over, reduce it. See that, okay, let me risk 5%. Let me risk 2%, let me risk any 30%. It's gonna be what you can afford to lose and how many trials you want your account to go for. We are here to make money. I want to recommend start risking 1%, 0.5%. If it's on prop firm, $100,000 prop firm, right? If it's on prop firm, $100,000 prop firm, $200,000 prop firm, you can say let me reach 0.5%, right? Let me risk 1%. But if it's your main capital, if you start being over careful, right? If you start playing it safe, you're not gonna make crazy money. You just be making tiny, tiny money from the market. Right now, if you want to go over fund or take risk on that account, you want to check how many times will I need to try before I blow the account. Before you hit 10 stop loss, you must hit take profit, right? Of which I'm going to also give you what you should be doing, the strategy aspect of this, right? So that's one thing you want to go for. How many tries you want to go for on this account? If I fund this $1,000, how many times will I take trade before I lose the account? Like I told you, if you want to flip the account, that $10,000 should, or that $1,000 you just deposited, or that $100 you just deposited should be like 1%, 10% of your main capital. You don't deposit your whole trading capital and risk it. Right now, if you fund this amount, you want to go over, okay, I'm risking $100, which is 10% per trade. Now, you're gonna ask, how are you gonna know I'm risking $10, I'm risking $100, $1,000 on this very trade? Right? So you go over, take the trade, and then not over risk. So you won't end up jumping on a trade, then you end up losing $500 on that very trade. Your plan is to risk just $100, which is 10%. But now you are ending up losing 50% of the account. Right? This is how you know how much you are risking on a trade. Now the first thing is gonna be how many pips is a stop loss. Now let me teach first. Right? We're gonna do live trading, check for opportunity this London. But first, let me make sure you get everything I'm saying. Then you practicalize it this week. Try it out this week and give testimony by the end of the week. Right? Now, the first thing is gonna be how many pips is your stop loss? If you are taking this very trade, how many pips are you risking? Now, why do you need to know how many pips you are risking? Because this different lot size, the different lot size you'll be using to open that very trade have a certain amount you will lose per pip. Right? Different lot sizes have their certain amount. Like one lot size now, if you use one lot size to open a trade, it's gonna be equal to about $100 per pip. One lot size is equal to about yes $10 per pip. Meaning if you use one lot size to open a trade, automatically you are risking $10 per pip. Meaning for every single pip that move, it's gonna be equal to $10. So if you go over, take this very trade and you go over risk 10 pips, 10 pips automatically gives you $100 risk. With that, you now know okay, worst case scenario, I want to lose more than $100 on this very trade because it's about 10 pips stop loss and I can comfortably use one lot size. But if you go over use 10 lot size on that very trade, you're gonna be risking the whole $1,000 on that very trade. Same thing with your low lot size, 0.1. 0.1 lot size now is about $1 per pip. With this, if you go over take this very trade, how many pips are you risking? If you risk 50 pips on this very trade, if you risk 50 pips on a trade, then you go over no, okay, I'm using 0.1 lot size, which is about $1 per pip. So which is gonna be automatically about $50 risk on that very trade. So if you're risking 50 pips stop loss using 0.1 lot size now, which is $1 per pip, automatically that trade is gonna be a $50 risk. Simple. You now know how much you are risking on that very trade. So before you even jump on the trade, you now know I'm gonna be risking my normal 10%, which is what I plan on risking, or I'm gonna be risking my normal 5%, which is what I plan on risking. With that, you now know how you split your account. Right? You now know, okay, I've given my account this 10 step trials, I've given my account 10 trade trials. After 10 trade, I know my account is gone. I've lost 10 trades in a row, my account is gone. Then the second thing you want to always consider in trading an account or trading your account is always going to be your strategy. Now, I'm going to just give you a quick one on how I go about it. Can you guys hear me? Are you guys with me? All right. So since you guys can hear me now, the second is gonna be strategy confirmation. Now, in trading, at a certain time, right, one side of the market is gonna favor trading traders, right? One side of the move is gonna always favor traders, right? It might be buy. You'll be looking out for buys, and those buys will be going well. Meaning that market, the order flow is bullish. Buyers are more aggressive on that very market. It's not left for you to decide. Okay, on this very market now, I'm meant to be taking buys. Now, where are you gonna take the buy? Where are you gonna enter the trade? Now, with what I taught you in my videos, right? With what I keep teaching you guys in those YouTube videos, I told you I do top analysis. On those higher time frame, like my 4 hour daily, I want to mark out those key levels where I expect the price to get to. Right. And once the price is going there, I'm going to keep looking out for that bias. If it's going up, if I'm looking for a level the price is going to likely get to at the top, I'm going to keep looking out for buys until price gets there. And if I have a level I expect the price to get to at the bottom, I'm going to keep looking out for sales until the price gets there. This is a practical nice example. On Euro USD, as of last week, I know many of you caught it, but many of my students as well, they also caught it. Now take a look at this. At a certain time with the strategy confirmation, with the strategy aspect, at a certain time, selling was favoring this very market. Take a look at this. Break of short to the downside. What does that tell you? We have an order block right here, which is a supply level. You guys understand the strategy very well. Order block, what happened? Price came there, tap on the order block, sold off. Your first sell. Break of short to the downside, using this internal low as liquidity, you took your first sell. What happened? It sold off, taking out this other low. If you notice, it didn't buy from here. If you notice, it didn't buy from this very zone. What happened? It broke out. If you take a buy right here, you get stopped out. Now, first, this has showed you, okay, this market is in a downtrend. Why? Because it has this break of structure. Now, another break has happened. What is this telling you? The order flow of this market is bearish. Sellers are the most aggressive ones in this very market. Now, what happened? This very one does not create any clear liquidity, but what happened? It came back there, still sold off. If you notice, it took out this very low again. What is that telling you? Directional bias is bearish. Selling is not going to be more favorable. At a time, the price is going to break straight to the upside. But once you want to now confirm that break of straight to the upside, is it valid? Is it a valid chance that, is there a chance that the price is going to start changing from there? If it was going down, I'm looking out for sell, sell, sell. Is there a chance that it's going to likely start buying from there? And where is that level gonna be? It's always gonna be key levels, which what I taught you in my YouTube videos. It's always gonna be a key level. Once the price gets to that very key level, the chance that it's gonna reverse. And those key levels, they are always your 4 hour time frame support, your 4 hour time frame resistance, your 4 hour time frame order block, your 4 hour time frame breaker blocks. Now this market was selling. Take a look at this. First sell happened, break of structure. What is that telling you? Sellers are more aggressive. Another break of trust to the downside. What happened? It came back to this order block after breaking structure, using this high as liquidity, came back to this order block. What happened? Sold off again. Broke out on this very low as a break of structure. This was the only buy I took, right? Because I was not active to actually spot all of these moves. Can you see multiple moves? First sell, second sell. Buying was not favoring this market. At a time, it broke straight to the upside, which everybody's going to mark out as a break to the upside. Break of short to the upside, and everyone is going to start looking out for buys. But what did I say? Unless it gets to that key level, that's when reversal is going to happen with the strategy I trade and with the way I trade it. Now, what happened? It didn't buy from here. It took at that very point. Now, what happened? I took this very sell. The entry, I guess I sent to the Telegram. I showed you guys. I showed you guys a trade, right? This setup I had. Now, what happened? I was still looking out for sell. I didn't look out for buys. It hit full TP. At a certain time, now the price has just gotten to a key level. which is the level I have been expecting the price to get to since all of this sale has been happening. Multiple sales has been happening. Now, this was the level I marked out where I expect the price to get to. Right? On getting to that very level, I've taken this very buy with a minimal risk. I'm not confident enough to certainly say I'm gonna take the whole risk on this very buy. And I didn't drop it as a signal because I didn't trust it. Unless it give a change of character on getting to that level, come down, break past that very high. That's when I'm gonna confirm that the order flow has shifted. Sellers are not likely going to be more aggressive with the way they have been aggressive. Meaning buyers will now step in. It's going to likely now buy. And where am I targeting? The next extreme point, which is a level I expect buyers to push the price to get to. Just like that. With this strategy now, you now know, okay, who is the current ones in charge of that market? And that's what keep happening. At a certain time, gold was bullish. All of these now were bullish, if you notice. But gold was going down at this very point. I keep looking out for sales. I caught a sale. I guess I do delete the setup. I caught a sale from here, from this very region. The same strategy. The confirmation. I'm going to just talk about the confirmation real quick later on. Now, what happened? Price started buying. Now, it started buying. You're going to be looking out for buys. Many traders are going to mark this out as a change of character. They will start taking it has broke to the downside. They start looking out for sale. You want to check that level. Is it a key level that the price is meant to reverse from? If it's not going to reverse, if it's not a key level, you keep looking out for buys. Gold gave multiple buy opportunity, but you didn't give it on a higher time frame. Those are traded on a much lower time frame. You guys caught so many. I haven't caught an opportunity on a 5 minute time frame at this very region last week. Right? This other buy that happened from this very region, I missed it. Using your liquidity, taking your trade from your order block, which is all you need. And if you don't have a certain strategy confirmation, you will likely still blow this account. Why? Because at a certain time, you jump on a trade. You don't have a strategy confirmation. You don't know what made you jump on that very trade. You don't know why you are in that very trade. If that trade goes against you, you lose. And you take another one, it goes against you, you lose. Now take this from me and note this down with what I said, with what you should be doing. You should try out this very week. Right? Note this down. This very week, right? Take 5 to 10 trades. Right? Take 5 to 10 trades. Follow only your strategy. Let me put it as your strategy so it will look as if my strategy, the SMC I use, the way I use it, the way I taught you guys in my YouTube videos. Right? My students, the way I taught you guys in my live classes. Now, follow the strategy. Follow your strategy. If you are trading the same strategy, the one I trade, follow the strategy. Follow only the strategy. Mark out your break of structure, order block, liquidity, then you take your trade. Take 10. At least 5 of those trades are going to go well. At least lowest, half of those trades are going to go. But if you fail to follow that your trading plan, that your trading strategy, trust me, 6 of them are going to go against you. At least 6 of them are going to go against you because you start jumping in without order block, you start jumping in without break of structure, and 6 will hit stop loss. And with that, your confidence will die down. You will not have confidence in your strategy. You feel your strategy is not working. Instead, you just did the wrong thing. You went ahead and started taking trade when you don't have a break of structure, when you don't have another block, when you don't have liquidity. But once you have your confirmation complete, at least half of those trades are going to go well. And if your target is at least 1:3, which I'm going to talk about, you end this week profitable. And if you keep doing that every single week, you keep ending every single trading week in profit. My worst week is always gonna be break even. This week I'm gonna just show you guys live how much I'll be risking on these different trades. Right, I'm gonna show you live and all my setup. I'm gonna just talk about it in this very live. I'll be dropping all my setup in the Telegram, also for my students. All the setup I'm gonna be having this very week, and all the setup I'm gonna likely be taking this very week. But I'm gonna drop them so you guys will see them. At least half of them are gonna go well. But if you don't have a trading system, you don't have a strategy you follow, you're just here jumping on trade, jumping on buy, jumping on sell. Today, you are trading your trend line. Tomorrow, you are trading support and resistance. Next tomorrow, you are trading on SMC. You keep hitting more and more stop loss. But if you follow just one trading system with the way I taught you, 4 hour time, daily 4 hour time for your key levels, lower time for your order block for entry, then you keep looking out for a certain move, then a move to a key level. Keep looking out for buys till it get to that key level. Keep looking out for sales till it get to that key level. You see for yourself how it's gonna be. So with this, which is the second thing that's gonna help you grow that your account, become more good with your trading. Now the third thing is gonna be your risk to reward ratio. With this strategy, this one thing that's always gonna make me like this strategy, right? The risk to reward ratio is always good. The risk to reward ratio is always crazy most of the time. My risk to reward ratio, me personally, is always at least 1:3, and that's what I will always tell you guys. Believe every single one of you know what risk to reward ratio is. You should target at least 1:3. But for now, many of you will start targeting 1:10, 1:20, crazy risk to reward ratio. It's very possible that you can hit those 1:20, 1:10 risk to reward ratio. But for now, since you've making some cool profit, you're making a couple of profit, but it's not consistent yet, stick to a certain risk to reward ratio. Stick to 1:3, 1:4, or 1:5 for now. Once your trade is up 1:5, take your profit. When your trade is up 1:4, you take your profit. Don't keep holding till you hit your full TP, because now you are still building up your confidence. You are still building up your trading plan. You are still building up a trading system. That's my advice for you on risk to reward ratio. And those that don't know what risk to reward ratio is, go and learn about risk to reward ratio so you can start making good and decent amount from trading. Right? Trading is always gonna be you risk, you make more. The more trade you take, the more trade you win, the more money you're gonna make. Right? The more trade you win, not mostly the more trade you take, but it's always gonna be the more trade you win. You must not win all the trades, but the more trade you win, even if you win half of those trades you are taking, with a 1:3 risk to reward ratio, you will still end the week in profit. And how is that possible? You just fund $1,000 account, and your plan is to risk $100, which is 10% of that account on a single trade, meaning that account is a 10 trial account. You want to try 10 times, and after 10 stop loss, your account is gone. Now, if you start risking this $100, which is 10% of that very account, you want to see what am I going to target, which is at least $300. And if you hit take profit, it should be at least $300 profit. You should not go over $100 profit and jump out. That's why your take profit is right there on MT5. Set it, wait, or watch the price gets there. Don't go over jump out before the price gets there. Now, if you hit take profit $300, that's 1:3, meaning you are making times 3. If you do this, you took, let's say, 10 trades. Let's say you are winning 50% of the trade. You are winning 5 out of 10, right? You took 10 trades that very week, and 5 of those trades hit stop loss. If 5 of those trades hit stop loss now, it's gonna be equal to minus $500, because you are risking just $100 on a single trade. 5 stop loss now is gonna be minus $500. Then if you eventually hit 5 take profit, meaning you won just 5 of those trades, 5 TP now is gonna be equal to plus, that's gonna be $100 on each take profit multiplied by 3 take profit, by 5 take profit, which is gonna be your $300 times 5, which is gonna be $1,500. If you go over, remove your loss, the minus $500 from you're gonna remove it from the profit, because you're no longer removing it from your balance, because you ended making half, you win half of those trades, and now you've made profit. So it's gonna be removing it from the profit you made. Your account, your profit for that week is gonna be $1,000. Even if you are winning half of those trades you are taking. But with this 1:3 risk to reward ratio, you are still up $1,000 that very week, even after losing half of those trades. And if you notice, you are risking 10% of your account, and you deposited $1,000, and you're risking 10%, you are up your account. You've doubled your account for that very week. Now, this when you are aggressive. Most traders, they might not be so aggressive to risk 10%. They might not be so aggressive to take 10 trades a week. Right? They must not be so aggressive. That's why it's always going to be up to you. Pick a certain percentage, maybe 5%, 1%, 10%. Like I told you, the more you risk, we're out here to make money. The more you give yourself room, if you keep playing it safe, right, you're gonna keep making little amount, right? Now, if you try this 10 times, 5 of them go well. And with the strategy I keep teaching you, with the way I keep teaching you the strategy, at least 5 of them are gonna go well. And with this, with a good risk to ratio, you see you've bagged double of your profit. And that's what is always gonna help you become profitable. Now the final thing is gonna be for you to stay disciplined. Right now, it's just simple. Right? The honest truth is just simple. You won't be able to stay consistent and trade only when you have your confirmation. Most times you start jumping on buys because you have a certain level or you have a certain level you expect the price to get to, you start jumping in. So next you FOMO, you feel the price has already left you, you jump in. Right? Sometimes you enter the trade, you don't even know how much you are risking. Those are things that's gonna just show that you are not disciplined. And if you stay disciplined enough, you will trust me, you will become profitable. You will enjoy trading. Trading is actually a cool and a simple thing you can actually do by just being disciplined. Being disciplined to target and risk just a certain percentage. Another truth is this. Many traders, once they risk 10% on a single trade, they make $300 on a single trade. Why? Because they want to make more money. That's not how you make more money. In that case, you are risking the whole profit you made. In that case, if that trade goes against you, you didn't make any profit at all on that very last trade. So if you are risking 10%, stay consistent with your 10%. And what I always do is once you have tripled that account, your $1,000 is now $3,000, then you can increase it to 10%. And 10% of the $3,000 trading account now is about $300. Then you can now say, let me start risking another 10%, which is $300. Once you have now tripled the account, that's how I go about it. But if you go over start risking 1%, 10% the next day, risking different percent, you won't make any single money. If you make money, you lose it back. So now, staying disciplined is for you to know, okay, if I'm going to be trading this very strategy, I'm going to be taking this very trade. Why am I taking it? Am I taking it from a breaker block? Am I taking it from an other block? Am I taking it from what am I trading? Why am I taking it? And that's what is always going to help you avoid unnecessary losses. Then the next thing is your risk to reward ratio. Hold a trade till it gives you at least 1 to 3. Like I told you, I believe you all know what risk to reward ratio is. If you don't know about risk to reward ratio, just go over, learn about it. It's what's going to help you become good. You should not see 100, you are risking $100, you are seeing $100 profit, you are jumping out. It should be at least times 3 of what you are risking. If you're risking 1,000, you should make at least $3,000 from that very trade. If you're risking $100, you should make at least $300. Same thing, if you're risking your small account, $10, you should make at least $30 from that very trade before you jump out. And what did I say? Since you are still building up your confidence, you are still building up your own personal trading system. Trust me, if you have a trading system for yourself, you won't still be looking for YouTube strategy and jumping from different YouTube channel to another. Since you're still building up a trading system, have a certain risk to reward ratio you're always targeting. 1:3, 1:4. Once 1:4, you take your profit. Then maybe if you want to flex, you want to show people that you are good, you can start setting your take profit to 1:7. But you know fully well that you took your profit at 1:3, 1:4. Because that now is going to help you build up that confidence and it's going to help. I know you're going to you're going to cut your profit short, but at the same time, you are building up your confidence. You are seeing that you are making money. You are seeing that your account is growing. It's better than you holding to full TP 1:7 and coming back down, taking you out at break even, or even taking you out at stop loss. That's how you build up confidence. And you staying disciplined, you want to go over, hold that trade till it give you at least 1:3. With these three things, trust me, you will start withdrawing every single time. And like I told you, before you jump on any trade, if your plan is to risk 1% of your account, make sure the risk is actually 1%. Go over, use your forex calculator or whatever you want to use. But if you want to know it just easily, know how many pips your stop loss is. Then know the lot size that's going to be suitable for that very risk. Then you take your trade. Just like that. Now, this is my plan for this very week. I'm gonna do everything live with you guys. All my setups. I believe you guys got everything I said. Right? What I've said so far is cool, and you're gonna do it. What I've said so far is cool, and they're gonna do it. Just start dropping likes. Right? Drop likes. Let me see how many likes are gonna be there. It's cool. You feel if you do it, you will be good. Like I told you, do it and you see profit. You'll see results this very week. By weekend, I'm also gonna do another live to see how many of you did it, how many of you made profit, how many of you will actually become, how many of you actually stayed profitable this very week without ending the week in drawdown. Right then, I'm gonna give you my plans for this very week, how I'm gonna trade right this very week. So drop a like, drop likes. Let me see how many likes are gonna be there. Now, this is what I'm gonna do. All my setups. Now, another thing. This is what it is with me, right? I feel with me, right? With what I'm gonna do, with what I'm gonna do with you guys, right? In my Telegram and also for my student. What I feel is, if you guys lose, right? If you guys lose, I send out a signal, right? I send out a signal. That signal hits stop loss. I do feel bad. Why? Because I know many of you are gonna blow your account, and even the last JPY signal that hit stop loss, which was the last signal I dropped, then gold will break even on gold. Many people blow their accounts, right? Now, why is that? Because they don't have a certain amount they are risking per trade, and it's always gonna be. I'm always gonna feel bad because you are losing money. Right now, if you go over, have a certain amount, you won't blow your account. Like I told you, give it a trial, give it a 5 trial, 10 trial, depending on how comfortable you're able to risk. Some traders they do risk 1% on a trade, and 1% is me. I don't risk 1% right now. Some traders they do risk 5%. Some traders they do risk 0.5%. That's what it is. Then this very week, all my setups will be dropped. Like I told you guys, I'm always feeling bad once I send out a signal and they hit stop loss. And I know many of you will blow your account. So I'm always gonna feel bad. So this very week, all my setups will be dropped. That's why I don't drop all my setups before. Right? That's why I don't always drop all my setup. If you notice, this very BTC, it missed. I didn't drop it as a signal. I didn't drop it in the group. The euro, the euro USD that is currently moving, I didn't drop it. I have a setup on gold. I didn't drop it. Why? Because I know if that trade goes against us, many traders will blow their accounts. That's what keep happening. Now, what I'm gonna do this very week is all my setup will be dropped. I'm gonna drop all my setups. So the Telegram link is gonna be in the description. Those are in the Telegram. You go over, join the Telegram. If you're not in the Telegram, just click on the link in the description to join. All my setup will be sent there. Now, all my setup does not mean you go over take all of them. Have a certain amount you will be risking on a single trade. 1% of your account, 5% of your account, 10% of your account. If you are more aggressive, 20% of the account. That means after 5 trade, your account is gone. You are giving that account 5 trial. Then all my setup will be dropped when I have my break of structure, liquidity, and I'll mark out order block or breaker block. And I'm gonna send all the setups. If it goes well, it goes well. If it doesn't go well, then we lose 1%, 5%, 10% of our account. Then we still have more trials to go, not blowing your account and not having an account to take the next trade. So firstly, all my setup will be dropped, right? And now I'm gonna be trading. Since everyone can fund this account, everyone can fund similar accounts, right? I'm gonna fund a new account with $100 on my main account. I'm also gonna be showing my profit on my main account and my losses on my main account. Right, on my main account, I'm gonna be risking like $500. Then I'm also gonna be showing all my profits on the main account. Then on this small account, I'm gonna be showing all my losses. I'm gonna fund this new $100 trading account and then trade it live with all the setup I'll be dropping, and I will be risking 10%. Meaning after 10 stop loss, that account is gone. And maybe we'll not blow the account this very week. We're gonna blow it maybe next week. That's if we hit 10 stop loss. And it's not possible with me. I can even trade it 5 times, but just for you guys to actually go over, do the same. If you're gonna be able to do it 10 times, meaning after 10 trade, you are comfortable losing that account after 10 stop loss, then you can go over raise the same. So it's gonna be $100 account live, then it's gonna be 10% risk. All setup will be sent out, 10% risk on on this small account. Then after the week, we'll do a recap. So there's gonna be a trade recap during the weekend. Probably on Friday. Right on Friday, we're gonna do a recap. I'm gonna do another live on this YouTube. Then share my screen, show you all the trade we took, show you how I took them, both the losses and the win. So this is how we're gonna go about it this very week. And this is how you should go over create a trading plan. Then another thing, this is also what it is. Right before I go over talk about this, the final thing, the third thing with this plan for your account this very week, you should have a certain amount or a certain number of stop loss, number of SL, a day or a week. And this is another key thing traders often miss. So with your trading, you want to go over no. Right? You want to go over no. Okay. After how many stop loss should I stop for that day? You are not always going to be in charge of the market. And no, market does not keep track record. If you have lost $1,000 on the last trade, market does not know. Market can still make you or still collect your $1,000 again on the second trade. Market does not know you've lost previously. So market don't keep track record. It's not like for you to keep track record of knowing I've lost a trade today. If I lost this other one the second time, I'm done for that very day. So it's going to be number of losses a day or a week. So after how many losses do you stop for that day? And after how many losses do you stop for a week? So with this, my losses is going to be 2 losses. After 2 losses a day, I'm going to stop. Then after 4 losses a week, I'm going to stop for that week. So this is how we're going to be trading. Then after, we're going to be, I don't know how many trades we're going to take this very week. So let's see how this week is going to go. Right? So this is going to be a plan for this very week. So you apply this and see for yourself how this is going to be. Right? Just, I don't know how I should put it, but this is the best I can do, right? I can't go over, start taking. This is why, if you notice, I didn't drop all my signals. I don't drop all my signals for you guys. Why? Because you guys do blow accounts with it. So I'm gonna be dropping all my setup from today. And if you don't have a certain amount, a certain percentage of your account you are risking, and you blow your account, don't always message me, right? Because it's gonna be up to you. Try it out, 5 trial, 10 trial account. Then you now know with my signals, I do give how many pips I'm risking. So if I'm dropping a signal with 10 pips, I'm gonna tell you I'm risking 10 pips. If I'm dropping on a signal with 50 pips, I'm gonna tell you I'm risking 50 pips. So with one lot size now and a 50 pip stop loss, and you have $10 per pip with that one lot size, that's about 10 times the 50 pips, which is about $500. Meaning on that very trade, if you use one lot size, you're gonna be risking $500 on that very trade. Simple. Because one lot size is equal to $10 per pip. And with a 50 pips, now it's going to be the $10 times the 50 pips, $500 risk. 0.1 lot size now is going to be $50 risk. Lowest lot size now is going to be $5 risk, just like that. Right? So that's how you know how much you are risking. So don't blow your account on any of my signals, and I'll be dropping all my setups. We're going to do everything live this very week. Let's see how this week is going to be, and let's see how trading is going to be this week. So let's not waste time. If you find this helpful, just start dropping a like in the chat box. Drop a like this very live, like the live, and then drop a like in the chat box. Now let's do live trading. Enough of the talking. Let's watch out for opportunity we have this very week. First, let's check out my favorites, which is on gold. Everyone knows on gold as of last week. Right, I'm gonna read the comments. Just calm down. I've not been able to read the comments. I'm gonna check out your comments. Now, as of last week, remember I told you guys I was waiting for gold at a certain level. Right, I was waiting for gold at a certain level, right, which is this level right here, this 4 hour time frame low. This was where I was waiting for gold to get to before reversing, and I believe I did it 2 times with you guys, 2 live with you guys, and I told you guys this. Now, but gold got to this very level, got to this 4 hour time frame low, and this was where it started reversing from. So it didn't get to my major level before it reversed. Now, initially I was taking sales. I took multiple sales on gold as it was going down. Why? Because I know my directional bias. Selling was favoring this market because with the strategy confirmation now, break of structure to the downside, and selling was favoring this market. And I know my directional bias. I took multiple sell. I hit stop loss on some. I won some. I won most of them. Why? Because I know the directional bias. But on getting to this very point, I never expected the reversal to happen. If I had expected it, trust me, I would have sent out multiple buy signals. Or I would have sent out multiple buy signals for you guys, but I wasn't expecting this sell, this buy. I was expecting it somewhere here. But when it gave a change of character, I stopped looking out for sales. I was not looking out for buys. Why? Because it has gotten to this very level, and this is a key level on the 4 hour time frame, which is what I thought in my YouTube video that it's gonna likely buy from. And if you notice, I had a buy as of last week. Let me see if I have it on this on my laptop or it was on my pad. But let's check it out on on my laptop. I had a buy opportunity last week before the end of the trading week, right before the market closed. Let me see if it's this very one. What's this, bro? Because generally, what I was not expecting was more buys. Okay, this was a buy opportunity I had on good on a 5 minute time frame. Let me show you on the chart where I took it. I was not expecting more buys. I was no longer expecting sales. Why? Because that directional bias is now bullish. And buy is going to always favor this market, which what I taught you into this class. Buy is going to favor this market. So I'm going to keep looking out for buys. And if you watch what I just, the chart setup, I'm going to show it again. This was where I took the buy. I was targeting this other high as my take profit stop loss below this very point. The setup, if you watch the setup close, this was the setup right here. This was where I took the buy, stop loss below the very point. I took it on Friday when market was about closing. Target was this high. Take out that high as a next liquidity zone. So what happened? It came tap on it. It just started moving. It was a market execution, it started moving, hitting full TP. Now, this was another buy I tried taking this morning. I didn't send it out because I've not done this live with you guys. But once I'm done with today, now I'm going to start dropping every single one of them for you guys. This was another buy opportunity using this as liquidity, break of structure. I look out for buys. I saw many people looking out for sell. I saw so many people looking out for sell. But what happened? They get stopped out. Why? Because this market directional bias is bullish. The other flow is bullish. Buyers are more interested in that very market. That's why buying is always going to favor it. So on a 4 hour time frame, I want to check where is it going to buy to, which is now a level I will not likely start watching out for reversal. Unless it gets there, my interest is still more of buys, buys, buys. And this is going to be this next high, which is going to be this next resistance right here. So this is going to be a level I even expect reversal to happen. So what am I going to now be doing? Going to be looking out for buys. So my entry time frame is always 30 minutes, 15 minutes, and 5 minutes. So I'm going to be looking out for buys. So let's look out for buy opportunity on gold today. Break of structure with my strategy break. Then let's see if this one has another break. Okay, this one also has a break, but it's not that clear, but it's also in a break of structure. But if I'm going to mark out another block, it's going to be this last black candle right here, which is going to be my other block, this last black candle. Then on the 15 minutes time frame, I guess it's also similar, but this now has not created any liquidity yet, right? So what am I going to do? I'm going to watch out for liquidity first before I take the trade, which is this level. We marked out this very key level as the level price can get to. So price has not yet gotten there. We're going to keep looking out for buys. So since there's no liquidity, I'm going to watch for liquidity first. Right, it's going up, watch out for liquidity, create liquidity before I take this very buy. If it does not create liquidity, I also have another order block which the price has not mitigated. We have this 15 minutes time frame order block right here. So there's also a zone I would like to be watching out for. So I'm going to drop this setup in the group. So this is a zone I'm watching out for. Right? Since there's this low does not have liquidity, I expect price to take it out. So this is a 15-minute time frame order block that has not been mitigated. The price has not tapped on it. So this is what I'm watching out for on gold. If this hits stop loss, is fine because you won't win all trades. At least if we win half of this trade, you're gonna be taking is very weak. We'll still make double of our account, right? If we take that, if we take 10 trades, just like that. So I'm gonna save this and then send to the groups. Exactly. I saw a question, right? I was about to ask, do you have a trading journal? Exactly. I have a trading journal. That's also a way you control your psychology, of which I'm gonna do that. I'm gonna show you how I write it down, right? How I write it out, literally how I go about it, right? Maybe I'll do a video on it, which is a video I was even planning on doing this weekend, but I was kind of busy. Right, a video on how to create a trading plan. Right, I told you guys I was gonna do it, so I'm gonna do that and then send to the groups, and then send do it on YouTube. Right, do it on YouTube on how I journal, how I do it, right? How I journal my trades. But this is what I'm watching out for on gold. It has liquidity. It price has not tapped on the other block, has a break of structure. But let's watch out for what's gonna happen. Then let's check out other markets. BTC is bullish. I didn't look out for sell. I saw one of my students looking out for sell, right? I corrected him, right? Told him why I was he looking out for sell. Was there a change of character? Because that's the only thing that's gonna make you look out for sell. If there's a change of character. Someone said, how much is your advanced mentor? She just there's a link in the description. Okay, okay, August. If you want to join, August is on. So you can click on the link in the description. Then you'll be redirected to join. So on BTC, BTC is going up. And if you notice, there's no key level I'm going to mark out where I expect BTC to get to, but let's watch out for if we're going to look at if we're going to find any buy opportunity now. So the only thing that's going to just be best, the best option is just to keep looking out for buys as it's going up. So let's just keep looking out for buys. And on average, if this is going to continue buying, don't move about over 100 pips. Right? If it's going to move, it will move over 100 pips. If it's come back to an order block and it's going to continue buying. So it's going to be 100 pips target, 100 pips on BTC. But this has not given a clear liquidity, so we'll just watch out for this as well on BTC. On USDJPY, let's watch out. Now, on in one of our live classes on YouTube, you guys can check out the live, right? We did this analysis on this GBP on JPY. So we did this very analysis that hits OTP 107. Then this other one was a personal trade. I didn't send out the signal. I did the setup was in the Telegram. You can check it out. Now this market is still bullish. I'm gonna keep looking out for buys. Right now, where is the price gonna likely sell from? I'm gonna mark it out a key level, which I love to use it for our time frame. So this is a 4 hour time frame high where I expect price to get to, right? It's a key level. So let's look out for buys since the price is gonna likely there's a chance that the price will get there, right? But before we buy, we don't just jump for buy. Just I guess this setup was also on my laptop. Let me see if I have it. Me, like I told you guys, I'm not here to impress you. I'm here to make money, right? I'm making money from trading, and I always love to. My things is always calm, right? My things is always calm. This very one hit stop loss. I didn't win this very one. My things is always calm because I don't like sharing my bragging about what I'm doing or whatever. I just do so you can learn, so you can keep avoid depositing over and over again, and that's what I always want for every single one of you. Right? This one went. This one did not trigger. This one did not activate. I guess this one did not activate. Where's the one I have on GPJ? Okay, maybe I have it on my pad, but let me see if I save it on my Telegram. I do save some of my setup to myself. But this is a junk Telegram. This was what I had on BTC yesterday that went to TP without activating the trade. This was what I had on Sunday. On Sunday that went well on BTC, but I didn't take profit before it reversed. This was the good setup I showed you guys earlier. I'm not just here to keep saying. I do it and it's going well. I guess it's not there. Let's just watch out what we are expecting them move on. So I'm still expecting to get here before reversing, but clearly there's no change of character yet. Right? There's no change of character yet, so I'm gonna keep looking out for some buyers opportunity. We have this other block, which this long week is also another block. Price already mitigated it, so now I have an other block right here. So this is a level price can now buy from. But we want to watch out for a break first or take our buy. But for now, no clear opportunity. But the bias is bullish. But we're gonna watch out for a break first, break of straw to the upside, or jump on this very buy. Right. So let's see for that market. GPJPY, those are trade GPJPY. I'm gonna be honest, this pair has just been crazy lately. Right? GPJPY has just been doing crazy this lately. But let's see what we're expecting. So we have this breaker where this market can come to a major resistance. Now, if the price is gonna sell, this is the closest 4 hour time frame level. Then we have this other higher one. So these are levels price can likely sell from to get to this very level. So this is gonna be my general target. And let's see which side of the market has been favoring this very pair. So on JPY, sell has been favoring this very pair. It has this breaker block where it came back to and respected. Tap on it, sold off, creating another block right here where it came back to sold off. So selling has been favoring this very market. So this is another block, potential sell zone till it gets here. So until it gets here, that's when I start looking out for a change. So now I marked out two key level on a 4 hour time frame. This very first one and this next one. Right now, why I'm using this very first one as my entry because it has this liquidity protecting it and it has a break to the downside. right? So that's why I'm confidently able to use this as my area to enter for my sell, right? If it does not have liquidity, I'm going to use this other one as liquidity for this next level I marked out. Maybe mark out this last candle as a breaker, then I'll take my sell from there. But since this one has liquidity, that's all the confirmation I need. More likely take a sell from here. Possible reversal zone, GBP. Possible sell zone on GBP JPY. Let's see what's going to happen. You can see how calmly I'm taking trades. I'm not coming here because London is about to open, or London, we're in London section, I'll start jumping on sell or start jumping on buys, right? So you trade calmly so you won't keep losing over and over again. So this is a breaker where I expect the price to get to. So until price gets there, I won't look out for buys. It's gonna be sell. Maybe if the price goes up, take out this very point, then I would start considering looking out for buys. Then I'll check if it has actually gotten to a key level. But for now, it's gonna be more sells. So let me see. Let me send this out as well. So these are just all my setups, right? Must not, like I told you, must not take every single one of them, and you must not blow your account on any one of those trades. On US 30, I'm already on a buy. I'm already on a buy on US 30. I'm buying it from this 4 hour time frame um breaker block. It was another block, price broke out, price came back there. So I'm on this very buy. So my directional bias is bullish to take out that other extreme high liquidity. So let's watch out for opportunity to enter now. I guess it has given a change of character, but let's see. No clear change. So if you want to enter, watch out for a break above this very high, which is gonna confirm a change of character. Let me adjust this. So if you want to take the trade, watch out for a break above that very high, which is gonna confirm that the price will actually buy from this very zone. And those are trade US 30. You know how US 30 always behaves. Once it give a change of character, it's gonna likely respect maybe any of the breaker block, then just shoot up. So once it breaks out of this very zone, start looking out for buy opportunity. I'm gonna check out and then let you guys know. US 30, that's what I'm expecting. I don't expect it to sell from here again. I don't expect it to sell from here again. Why? Because selling has been favoring this market. If you notice, if you take a sell, it's gonna favor it. Why? Because that directional bias was bearish, just like that. Then Euro USD, like I told you, watch out for a break above this very high as a valid change of character. Then I'll start looking out for my buys because it's at a key level, 4 hour time frame key level where buy can happen. So the buy is already reacting. So I'm watching out for a change of character. So I'll look out for my multiple buys. So on Euro USD, I just said that. Someone is asking on Euro USD. Someone is saying, how do you know where to mark on a higher time frame? I'm gonna check out GBP USD. Now this is what I mark out on the higher time frame. I just mark out major, even this very sale. Take a look at where this sale happened. Let me indicate it so you can see it. I had the setup, I guess, on this laptop. Take a look at where this sale happened. Can you see it? A 4 hour time frame level. So that's how I mark out my key level, where the body ended. Many questions have been coming up like this. Once the price gets there, start going down, where the candle closed, where the body ended, and the wick started coming out. So that's the level I will mark out. Can you see it? Where the wick started coming out, that's the level I marked out. In this other case, in this other case, where the same thing with the low, I'm going to mark out the low where the body ended, where the wick started going off. Then if you notice, this is now a breaker block, which was like a support, major low, price just came, sold off. On coming back, there is now a breaker where you can now sell from. And if you notice, that's where the price actually got to and it started dropping, right? So I'm not going to check so many pairs. Let me just watch out for the ones I trade. Then with what I've taught you, just go over, check out the pairs. Go to my YouTube videos again. I talk about so many things there. Then you see for yourself how it is. On Euro USD, like I told you, I'm watching out for a break above this very high first. Then I'll start looking out for my buys. As the price breakouts, I'll start looking out for more buys. Let's watch out for where GP USD got to. So GP USD has not got to any key level. So there's no key level GP USD has gotten to, but let's still watch out. On a daily time frame, we have this major high, right? Which is now like an order block. This is where GP USD got to. So there's a chance that it can still buy, but let's watch out for a change of character first. Since it has been going down, let's watch out for a change of character first before we start looking out for buys. Right? The change of character is going to be the price breaking past this very high. Maybe something like this. Then on BTC, I told you I'm watching out for liquidity for you to create a liquidity for me. So I'll take this very buy from here. So the clear opportunity we have this morning is on this very GPJPY, this possible sell, then on gold, this other possible buy. Right. So if you have any question, just drop in the chat box. I guess. Okay, someone said, why is it not the first high? Now the low is the closest to the price. Right? The low is the closest to the price. That's why I marked out the low, not the high. The one closer to the price. Believe that answered your question. Someone say a counter trend. That's what it is. I believe I told you guys that. It's going down. Selling is going to favor this market. But at a certain time, it's going to get to a level where it's going to change. And that change now is no longer a counter trend. It's now the new trend that is going to likely start happening. Right? It's going to be the new trend that is likely now going to start happening, not a counter trend. Okay, someone said, why did I mark out this first side? This high is pretty small, right? This is the major one that the price needs to take out. Price can take out this one as liquidity, then keep dropping. I believe you got that. It's gonna take out this point as liquidity, then keep dropping. But if you take out this main one, then it's gonna give us confirmation that it's gonna buy more. Right. So I'll see you all later on in the day. If I'm still available during London, I'll I'll tell you guys so we can do another live. So see what we are still expecting during London. But for now, hopefully this one triggers our trade before dropping because that's taking out this liquidity. That's taking out this liquidity can start dropping, hitting 40p, but hopefully it activates us before it goes down. I believe you guys understand that. Hopefully it activates the trade before going down. Then on gold, hopefully it's also activate us before hitting. Like I told you, once I see it clear, if I have an order block or a breaker block, I can just jump on a buy and keep going up and keep buying and the price start going up. But if it's not in a clear order block or breaker, I'm gonna just calm down, watch out for it to get there before I take my trade. Just like that. If this one does not break structure, meaning it's gonna sell. and it's gonna sell this USDJPY. Euro USD, just watch out. Once it breaks out this very point, then watch out for buys. I'm active on the chart, so I'll be dropping the setups once I'm seeing new opportunity. So guys, I guess I'll see you all in the next class. Someone said I haven't answered the question on our entry point or after 2 to 3 RR. If you want to break even, I do break even at 1:2, right? But at once I'm running 1:2 in profit, I'll set my break even at my entry. That's where I always break even. Entry price, not I don't move it up in a little profit. At my entry price, the exact point. That's why I break even. I guess that's answered the question. Someone said, what if price continues to go down? Then if it's on GBP that you are saying that, they will miss that opportunity. It keep dropping. Let's not jump in, right? Because if we jump in, our stop loss is gonna be large and we don't have a certain area we can place our stop loss. So let's hope that it comes back up before dropping. So if it just start dropping, then we've missed this entry, we don't jump in. That's how you stay disciplined. I believe this is the question you're asking. Then your euro on euro US, like I told you, it can drop. But if it give break out of this very point, if it's your to take out mark out this breaker and buy from this breaker block, then you can take your buy from here. Once it comes back, they after changing character, just like that. All right, let's see how it's gonna be. Right, just follow what I've given you. Follow this plan I've given you. Right, then you see how it's gonna be. So I'll see you all later. I'll see you all later on. So take care, guys.